Hi, this is Randy Finney with Right Side of the Chart, and this is an early to mid-session update for Thursday, May 13th, 2021. We'll start out with a quick update on the broad markets and then highlight a few trade ideas, and we'll keep this one relatively short because there's not much more to add. I've put out quite a few static chart images, screenshots this morning, highlighting the key levels to watch, and one of those levels being the 410.39ish level on SPY. And on the futures, remember I had a line right above there too, and that so far has stopped the rally. And and I want to just say this. If you were wanting to short yesterday at the lows as we came into support the first target, and today with the market bouncing, the broad market was up better than 1.5% a little earlier, I believe, from the close yesterday. Let me try to measure it out there for you. Yeah, it was up about 1.6, 1.7%. And so if you're getting bullish and want to buy, then I can tell your trading style is contrary or opposite of mine. What you want to be looking at is covering, or at least not shorting, holding off when something falls to support. Wait to see that support level break, or cover your shorts, go long for a bounce if you're an active trader. And then when you get sell signals like we had recently, you get a bounce back all the way up to resistance like that, and it's not unusual to see a brief momentum fueled overshoot. There's a lot of momentum going in there. Then that's a gift. And here's the thing, I may be wrong on the longer term call of more downside here, but I would much, much, much rather be wrong than to not take action. In other words, you miss 100% of the shots not taken. And again, this is my trading style. Sell signals came, evidence has been building more and more. We've seen more and more check boxes over the last several days here on to be short, and just keep layering into those shorts. And that's what I've done. And where am I wrong? There's no fine hard line, but I mentioned this morning, if you were to short here, whether it's adding back shorts that you covered on T1, and remember, you have both the S&P 500 and the Nasdaq both falling to those targets. And in pre-market, we were exactly right on that top of that target zone there earlier today. And so I mentioned, if you added back or if it's a new short for you, it doesn't matter. And that's what I'm trying to say is everybody has different entry points. So I can't give a one-size-fits-all stop or a one-size-fits-all price target. But let's just say your average cost is, or you're in right here, then I do think a stop on somewhat above there, give it a little bit of room. That's what the market does. It sees levels that everyone else sees, the algos, which are the algorithmic trading programs, and as well as natural traders, they see levels and they can push up and clear out stops. They call it a stop raid. And that's why if you give it a at least a 60-minute close or even a daily close above that level, and look, it's not too far. And from a risk reward perspective, you're talking, if you shorted 410.39 today, that level's only, we're talking about 2%. Right there, given a little room, would be about a 2% stop loss. And for the downside potential, I mean, this market could easily have well into the double digits left on the downside, 10% or more. So even a 10% drop with a 2% stop loss is a 5-to-1 risk-reward ratio, which is outstanding. I'll take those all day long. It's probabilities. You take 5-to-1 risk-reward ratios when you get them. Heck, you can lose, several of your trades and finally get one or two right, and you're still making money. But of course, I think the odds are better than that. Anyway, let's move on to QQQ. So there it is. We're still there. As I'm doing the video, we pretty much have stopped, and so far pulling back. And like I said, T1 was already hit in the pre-market session. I showed that was in the chart this morning. When you go here, you edit chart properties, turn on the pre-market trades, and post pre-data, always show, and then you can see right there. Look at that perfect tag. That's an erroneous candle right there, that long stick. These are the actual candles, these white ones in pre-market. So there was your chance right there. to go long, get out shorts if you didn't do it yesterday, and gain a little bounce. And now, being that we've already hit the first target, look, the bottom of the gap is still support, so we'd probably have buyers step in there. So if you're just a very active trader and you've been zigzagging these, covering it, support, going long, then selling longs, reversing and going back short at resistance, that would be your next target right there. But in a vacuum. Why I say that is because it depends on what is QQQ doing at the same time, what are the market leading stocks, and that's why these videos sometimes get so lengthy, because even if you only trade S&P 500, I think you're remiss not watching the other indexes and especially the market leading stocks, because maybe SPY falls down to that 471 support. You expect the buyers to step in because that's the bottom of the gap. Remember, this support zone was a gap right there. It's this gap back here. And so you have two levels that are likely to produce reactions, the top of the gap and the bottom. However, where I'm going with that is, say we get to the bottom there, and then at the same time, Apple and Microsoft and Tesla and Amazon, they're all breaking, they've just broken support, and the NASDAQ 100 just broke support, then we could go right on through here. So that's why I spend so much time talking about the different things and trying to keep an eye on them. And if you have multiple monitors, great. You can watch more charts at once. Otherwise, you're gonna have to toggle around. And look, at the end of the day, if you're not an active trader and all that makes your head spin, I try to speak to the less active swing trader and investor. And so far, we've got some good sell signals in the last couple days. Sit tight. That's what I would do. If you were not caring about gaming in or leveraging in or gaming bounces or adding in more shorts, then just sit tight with what you have and put stops, on a reasonable level and let it run. Like I said, if daily sell signals have the potential, which I'm about to show you, they have the potential to morph into weekly sell signals. So there's the S&P 500. Here's QQQ. Quick update. QQQ these were all support levels on the way down, resistance, and we had the divergence I pointed out there on the 60-minute chart, but I've already spoke to that. We are coming off a much bigger divergent high and sell signals on the more important daily chart. So call it confirmation bias if you want, but I don't. I recognize this and I decide to dismiss it as a divergence that's likely to get burned through, just like we had divergence there the other day on the PPO on QQQ, and it's no longer there because we've made a lower low. So bigger picture says the trend has probably changed. We're probably in the very early stages of a correction with more downside to come, and as such, not really the time to reverse and go long for the next leg up as far as swing positions go. In hindsight, it could be, and if you are bullish with that mindset and you're looking for levels to buy, then that's what I do here with this analysis. So, one thing, won't always get the call right every time, but I'm pretty good at identifying key support and resistance levels where buyers are likely to step in, or if those levels are broken, then you're likely to get the next move down or up to the next level. Okay, and we're going to move on to the daily charts here in just a second. But on the futures, there, remember, this was the, we had the early sell signal here, but that wasn't a big level. This was the big level, the yellow line, 4100. That was broken yesterday, providing an objective short entry. The first target was hit with a little bit of a momentum-fueled overshoot. That came in the early hour session. By the time I did the update this morning, we had regained that, so we popped back up. Support once broken becomes resistance. Remember, on the futures you had these two lines here. You had this line here as well that I highlighted because we had quite a few reactions here, and that's about where we bounced up to today. So yeah, still maintaining as I'm doing the video. Look, we're only at 4103 versus my line at 4104, so still a very objective level to short. Tight stops if you want to keep stops very tight, or more liberal stops if you're trying to capture a much larger move and you have deeper price targets. And if you're looking for new highs and beyond, well, that was my first and minimum target. It was hit. Sometimes in these corrections in a strong bull trend, the most shallow targets are hit, and then the additional targets we never make it down there. So same thing in reverse for a bull right now is you can go long with a stop below that recent reaction low, because look, we already tested that once, That first target was hit. If we come back down to it again, I favor a move back down through it, and that is my preferred scenario. So therefore, you can have a relatively tight stop if you're swinging for more upside, whether it's new highs or just a move back up to the next resistance level. That's ES, then NQ. Here's, NQ, you have positive divergence on both the PPO and the RSI, unlike QQQ. And you even have this little bullish falling wedge pattern right here, right? You popped it, and that would normally be, we all see what we want to see. I recognize it, and that's where bulls would usually be going long, and I'm sure some did. However, so far that breakout has failed. Well, we're back testing actually as I do the video. We're right about on the line. See, here's a breakout, back test. But again, just like negative divergences often get burned through in a bull trend, if this is the early stages of a correction with more downside to come, we're coming off that big divergent high, then we'll probably see either the divergences get burned through, or we could have another leg down. This is even bigger support here at 120704. That's my next target right there. Maybe we make it down there, and we probably if it happens soon, even bigger divergence, and then maybe time to cover shorts and go long for something more than just a quick bounce. So those are the levels to watch. My preferred scenario has us going down there. I think this bounce is limited. We probably already had the bounce today. If not, remember this was a big level here, 13,285, very big level for me. That was the highs from that last correction, that 13% drop in NQ. QQQ fell 12. The futures, Nasdaq 100 futures fell 13%, and we bounced around to that 13,285-ish level, and finally had our breakout right here, breakout and back test, and that rally. So that is, to me, very significant resistance, and you can see the reaction that we had around that level so far. So again, common theme. No guarantees, but this is as good as it gets. And I'll also say this, it's probably that last chance. If we're at where we think we are, I always like to, use that analogy of that map you get in a shopping mall. You are here, little arrow pointing where you're at. If we're at where I think we are, at least on this, in this drop, we're probably going to have, once we take out yesterday's lows, probably get some even more impulsive selling. So, if you've traded for years, you've seen so far what we've had. This is, as big as the headlines were yesterday. The Dow was down. I forget how many points. To this day, it never amazes me that, let me try to find that for you, that, the media harps on, even the Wall Street Journal, geared more towards investors. They said, let's see, I'm trying to find the headlines here. Here it is. Wall Street Journal news alert: Dow falls more than 680 points. I think, the Dow, as time goes on, it just gets bigger and bigger as far as the points go. So a 680 point drop is not what it used to be. The drop yesterday was, it was notable, but it's nothing that big. And during a correction, you usually hit that point, if we're going to have a deeper one, what I call the point of recognition. Right here, you had a correction going on here, similar to this one. There was a big red candle, even bigger, and right there, when we took out those lows, that was what I call the POR, point of recognition, where the dip buyers and the bulls, it's their rut row moment where they realize, oh, this isn't your run-of-the-mill pullback anymore. I've been buying the dip, and guess what? It's not working. So stops start to get hit. They throw in the towel, and then you get the big drop that comes after that. So we could be getting close to that. And if we are, the only reason I bring this up is, soon, if we drop much more, we take out the lows, if it's impulsive, then you're not going to have many more objective times to short. You might as well just, I can just tell you, if I've missed a move on a breakout or a breakdown, and we're halfway or well into, the correction or getting close to price target, I acknowledge I missed it, and I'll just wait for the next setup. I don't like to chase. I don't like to add to or start and open a position in what I call no man's land, which is smack between support and resistance. So that's that. So the updates might be a little less frequent. But if we start moving up and start taking out the overhead resistance levels, I'll give you updates as well. I'll just say, look, wow, thought we were going lower, but this is a heck of a market. Extremely strong, bullish, very bullish action if this market can rally back up. And remember, now I'm jumping out to the daily time frames. The bigger picture is this. I'll turn all these lines off right here and make it very clear as to what the most important developments are. There's our primary uptrend line on the S&P 500, and that was broken. We had a sell signal 2 days ago. And then yesterday, confirmation with an additional red stick. As mentioned, the 50-day moving average is where the buyers have stepped in for a while now. They stepped in back here. We pierced it a few times there, but quickly recovered it. Either way, it is a level that traders watch, and so far that's where we hit. So we hit both price support, that first target I gave you before, the gap target zone, and the same comparable support on ES as well as NQ. And so that's where the buyers should have and did step in. Now the $1,000,000 question is how many more buyers are behind there, because that's all the stock market is. It's simply buyers versus sellers. If you have more buyers on the sidelines than sellers, then prices are going to go up. If you have more sellers, and these could be longs that have been in ready to take profits, mutual funds, hedge funds, institutions, that's going to determine. So this is just it's a battleground right here between bulls and bears, and we'll watch this and we'll see how we finish the day today, and then more so how we finish the week. But I just wanted to mention, so in the daily chart, that sell signal is still very much intact, and that's why my MO right now, my preferred MO is shorting rips back into resistance. At least for time being. And then QQQ, roll back here a little bit, turn off everything else, and the same story. You have the trend line off the lows right there, and a very solid and clear breakdown confirmed with additional red candles. And so quite a bit of work to do. QQQ could bounce back, as could SPY, and so here's another level if you want to consider a stop. You could bounce all the way back and back test the trend line. Oops, no, don't want to do that. And what a back test would be painful to ride out if you're aggressively short right now, but sometimes you break down and never look back. Sometimes you break down and back test. So that would be also a level for a stop. Now the tough part about using a back test for a stop is sometimes you can back test and then back test again and again and again and then finally break out. And so you're going to have to pick a level, whatever your comfort level is, if you want to use that wider stop to allow for a back test and another leg down. Ultimately, if QQQ and SPY and IWM, they all snap back above those trend lines, I don't see any other way to spin that but bullish. If all these trend lines like this one here as well and IWM was just broken, if those are all regained, taken back by a fair margin, I don't see any way to spin that as anything but bullish. Now, I'll point out, like I did before, it doesn't mean that we're going to go to the moon. Near term, it's going to be bullish, but longer term, at least until and unless these divergences, these negative divergences are taken out, it still means that the risk reward for going long is not very favorable, even though the trend will still be intact. Just the upside still appears limited based on these divergences and everything else. But the other thing is we could just go down from here. Now, all right, let me just roll out to the weeklies and talk about that for a second. This is IWM on the weekly chart. Back here we had a bearish PPO crossover, and that's something to note right here. When the PPO line, that blue line crosses below the white line, that's a bearish crossover. That often defines trend changes, signals a trend change. We had one right there. Look at that. Great time to get short. And from there, from the time you get the signal or shortly around that time, we're about a 43% drop on IWM. And that was the last bearish crossover we had. And then here, it said, boom, bullish crossover, trend change to bullish, and it stayed there. And then these lines, when you look at them, they often act as support and resistance. You had a couple pullbacks, and we successfully stayed above that level. So that is another check mark for the bearish case, and even more of a longer term, like a swing trade, a multi-week or multi-month signal. And when you look at IWM here on this weekly chart, I'm going to add a line right about here. You could go down to those two reaction lows, but I can see a lot of the candles, when you look tight, zoom in tight, a lot of these candles ended about this point right here. And there are these two reaction lows there. And, this has been consolidation. And again, we're looking at weekly candles. So break below that will be quite bearish. And that's what the weekly chart looks like on IWM. SPY and QQQ I wanted to show you because this is important. Right now, and I say this all the time, the week, well, it's not really young. There's still plenty of time left. It is noon on Thursday. We have another day and a half of trading, and a lot can and probably will happen before the close tomorrow. So this is a weekly chart. The only thing that matters is how this candle closes. But as of now, we have a bearish engulfing. A bearish engulfing is when the body, the fat part of a candle, engulfs the body of the previous candle or candles. In this case, right now we're engulfing at least the previous 4 candles. And that is a potential reversal or topping candlestick. So we'll see. Does this end here? Do we close back up like this, get another doji like we've had for the last few weeks? If so, no bearish engulfing. Or does it do this and go down even more? If so, the redder the better. And you can also see on this weekly chart, see my trend line here, how I have it drawn? Although I have us below trend on the daily, on the weekly, we need to get below this. We need to close the week by tomorrow, end of day tomorrow. If we close down at or below today's lows and yesterday's lows, right there, then we're going to have a sell signal on the more significant weekly. We're going to have both the bearish engulfing and a trend line break on the weekly. So that's something to note. Otherwise, if you're a long-term investor or trader, you don't have the sell signals on the weekly. You might want to stay long. We've come tested it here, tested it here, tested it here. They could buy it here, and we may ultimately will go on to break this trend line. It's just a matter of do we do it this week, next week, or months from now. And that's certainly a level I'll be watching on the S&P 500. And then QQQ, we already broke trend, at least the way I had the trend line drawn right here. Solid red candle, and we just had a little snapback rally, extended the negative divergence, and then we're rolling over so far. The PPO, I think I mentioned this in the past couple weeks here, couple months. That was we had a bearish crossover here right before that big drop into the March lows of COVID. Last bearish crossover was there. We had a little whipsaw. We kind of whipped around here, but this remains this one trend indicator. Again, the PPO, by looking at the PPO line, the blue line is below the signal line, the white line. And that's bearish in itself. And the fact we also put in a divergent high. The trend has been resilient. As you can see, we're still, in a larger uptrend. This is our uptrend. So what do we have to do to violate that uptrend? Call it into question. We have to break this level here, about 297.61 right there, because that'll take out that previous reaction low. There were also some major reaction highs there, and this whole thing right here was a breakout above this previous consolidation range. So that would bring that uptrend into question and open the door for more downside. And if you are a bull looking for new highs, again, I showed you levels on the daily chart, or if we get a pullback to that 297, which would be a swing target too on the downside, you could certainly go long there with a stop somewhat below. If we break that on the weekly, the next support I have is all the way down around 268.30. So again, these are things I'll be watching for this week, including that candlestick on SPY, and then a few trade ideas, and we'll wrap this video up. Okay, probably the biggest news since I did any of the videos yesterday or any updates was Musk's tweet last night. Oh my gosh, this guy is an egomaniac if I've ever seen one. As far as his, I think he just gets a rise out of pumping these cryptos and then turning around and going the other way on them, whether it's Dogecoin or this one, Bitcoin. And if you didn't read the headlines, his latest was Tesla's going to stop taking Bitcoin and payments for cars because it takes too much energy to mine. Like, it's if he didn't know that before, if they didn't know that before. And so, of course, Bitcoin's down on that news, rightfully so. The whole Tesla thing and Musk's being such a high-profile person, tweeting about it has given validity to it, and then all of a sudden they're saying now they're going to stop that. And of course, what that does, it sets precedents for other companies because he brought up the environmental issues, and that's a big, taboo thing. It takes a tremendous amount of energy to mine Bitcoin. You can look into that and see all that stuff. Either way, knocked it down, but let's forget about the news. Let's look at the charts. there's that big level right there. You know, we had a sell signal in Bitcoin futures. I've had the charts that I get from the ones I've been using for futures. For whatever reason, they just lost all the data going back. That's why I haven't updated that yearly chart yet. But I showed you a couple weeks back a sell signal on my primary trend line break. I only have they started repopulating the data, but it's only going back a few weeks. So I'm just sticking to GBTC for now when I do these videos. I have other charting programs I can get the Bitcoin futures on, but I can just tell you this is the one most people are trading out there, and there it is. I mean, boom, boom, boom. We're flirting with that level right there. You can see all these previous reaction lows, and I think we'll break it and hit my second target. Remember, I laid out a price target here. We had a sell signal back here. T1 was my first target zone, which was hit right there, the top of it, and then we hit the bottom of it there. Hit the bottom again, and now we're cracking through the bottom. So there's a trade idea for you. That should open the door to my next target, which would be another 27% drop, all said and done from that first sell signal. If you've stuck with this one and we get to my second target, you're good for about 47%. And if things get really ugly, that's a potential target down there around 17. Then the other ones, Mara, last couple of videos I couldn't recall, so I pulled the ticker symbols on Mara today. Let me show you how I do that on the site. Okay, when you're on the site, there's a couple ways to find whatever you want. Go into resources, there's a ticker, select your ticker at the bottom of the page, or when you're looking at a post like this, you notice these tags down here, and you see how they change color when I highlight them. These are symbol tags. Every post I make, anytime I cover any security, I tag it with whatever securities are covered in that post, whether it's screenshots or videos. So you can go back here on Mara and see the first time I ever started covering this one was back on April 14th, and so that's where, and it was in the short swing trade idea video. So this one has just paid off real nice. So I went back there. Here's where I covered it, and I said at the time it was a short. We had just put in a divergent high. I laid out all these targets here and told you ultimately I think I'm calling it down to about 1037. I know that's an aggressive target. Well, back then you probably were some eyes were probably rolling, but so far we're down from where it was highlighted about 55%, and we've broken the 2437 target, and that should open the door to my 1615 next target at 1615. So that's good. You're good for about a 62, 60, whatever, roughly 62, 63% drop on that one. And if we hit that 1037 and intersecting uptrend line support, you're good for about 76%. And again, you know, what so far this 55% drop has occurred over just 20, not less than a month, and you can see. That's the beautiful thing about shorting stocks. They tend to fall much faster than they rise. We're back now where we were, you know, it took the stock this long to get up there and only this long to fall. And so I just wanted to update that one and say that there's more meat on the bone even at this point in time. The other cryptos, there was one this morning, but it happened too quick for me to get a post out. I saw ETCG pull back to this trend line support. It's back there again almost now, but remember I've highlighted this trend line right here. There's an uptrend line on it and $48. That was a former price target. This one was a long trade idea here on a breakout above 2244, or was it above that 1737? At least this one. And we broke out, back test several times, hit that, and even passed it, went past there, pulled back, and we've had several times where they've stepped in both at the $48 level and this uptrend line. So this is a key uptrend line. Ethereum has done better than Bitcoin as of late, and just even active trading this morning when we were at that level, it was good for a quick pop right here. That's this morning right after the open. We hit that trend line perfectly and ran up, so it was good for a quick 23% trade. And look, we're still above the trend line, so I'm going to point it out as saying it's still objective with a stop somewhat below. This whole Bitcoin must thing might have bigger implications on the whole crypto arena, even though this one as of late has been doing better than Bitcoin. Just be careful. I have to say that always trading these cryptos. Just be careful. Put your Vegas money in them, no more than that. That means as much as you're willing to lose. And don't get married to it. Don't underestimate how high these can go. if long or if shorting them, and don't underestimate just how far they can fall. I mean, this is the true worth of all these is zero. There's no, you can get a company, a stock, you have tangible assets, intangibles, you have buildings, property, equipment, copyrights, all this other stuff. There's really nothing in backing these. I heard it's the analogy of you're just getting a slot on an Excel spreadsheet, pretty much, when you have, crypto coin or cryptocurrency or whatever way you want to call it. So either way, I wanted to do an update there. And then this one's looking good lately. And this one's flying under the radar, doing its own thing. DM Desktop Metal. I highlighted this as a long trade idea recently. First on the pullback to the 1254 level, but then I said even better if we get down to 1079, because that's big support on it. And you had this uptrend line as well coming in. And so it hit it. We had a breakout recently, broke out, back tested, also providing objective entry. It's been moving up pretty good since that back test there. Just in the last few days, it's rallied about 28%. Remember, all ships are lifted in a rising tide and vice versa. I have to look into this, but I don't believe this is an S&P 500 component. If not, sometimes you get these little niche stocks, as long as they're not in the... Now, this might be in the Russell 2000. I don't know. I'd have to check. Haven't looked into that part of it, or even a mid-cap stock. Where I'm getting at is the stocks that I'm most comfortable trading long during a stock market correction. If I'm short the broad markets and other individual stocks that are index components, I'll go long some of these niche stocks that are not components of the indexes, or if they are, they're not top weighted components. Why? Because they don't have that forced selling. Apple, the odds of Apple going up during a 10% correction in the stock market are near zero. They're not exactly zero, but they're close to it, because it is the top component of the S&P 500 and NASDAQ 100. And so money comes out of QQQ and SPY. Guess what? QQQ and SPY and all the index tracking mutual funds and all mutual funds as a whole, growth funds, what do they have to do? Well, they have to sell what they own to meet those liquidations, and they don't just sell equally. If they have more Apple than everything else, they've got to sell a little more Apple. And so that's why you want to focus. If you're going to go long as hedges to index shorts, you might not want to go long Apple, because it's going to be moving right in line with the indexes. A quick update on gold. Not much. I'll probably cut back on my updates on gold. It's doing what it should do. It's starting to act more as that flight to safety instrument. There's been a technical case to buy gold, a fundamental case that I've made. And here, the only thing I've changed on my chart is right here. I've added this uptrend line right here that I didn't have before. And that comes off that recent low here back in late March, I think it was. And we have a couple other lows there. So there's a trend line to watch. What does that mean? Any pullback? 1798.50 was a big level right there. Resistance right here. And any pullbacks to there would offer an objective long entry with a stop somewhat below if we get that pullback there. We don't have any divergence at this time. We could. If we go on and make a new high soon like this, we might have negative divergence. But again, I've made the case for a longer term trend trade, and I'm not, on those positions, I'm not as concerned about every little pullback along the way. When you're in a bull trend, divergences either play out for very minor corrections, or sometimes they just get burned through altogether. And so the outlook for gold still looks good in my opinion. Primarily longer term, even the near term, I think looks pretty good. Unless, like I said, we get a little bit of a pullback there, 1798.50 or the trend line, that would be an objective area to add back some exposure if you're looking to. Oh, one more. Let me do one more and wrap this video up. Get out to you guys. Crude oil. All right. So crude was ripping yesterday. Everyone was foaming at the mouth, thinking it's bullish because of that pipeline shut down with the cyberware attack. But as I read that actually, there was a case to be made that that made gasoline prices pop up, obviously, but crude may suffer from that when they, if they get backed up, they can only refine so much. And also, again, more importantly for me is always the technicals. I had good resistance up here at 66.46. We're also coming off this divergent high right here. Series of divergent highs. This is the most recent one. And so yesterday I mentioned it crude at resistance, also providing an objective short entry. That 66.46 resistance, and boom, look at that perfect knockdown off that level. It dropped about it's over about 4.5% so far. So congrats to those that stepped in and bought it, or shorted it, I should say, when everybody else wanted to buy it yesterday here at resistance. And now the reason I wanted to do an update besides that is, look at that. We're taking out that 63.94 support. That's a level I've had on this chart for a while right here. You can see all these reactions along the way, and most importantly, that's what's contained all the pullbacks, and we just popped it. So that should open the door to my next targets. Ultimately, at this point in time, I'm really eyeing this 61.87. This is the first stop here, my first target, 62.73. And they'll probably step in and buy it there, have a reaction, but we might work our way down here to 61.87 as well, as long as this breakdown sticks. All right, let me wrap it up there, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.